I am joined by Jharonne Martis, Director of Consumer Research at LSEG. Jharonne, great to have you.
Good to be here, Caroline.
So we're talking retail sales. They largely came in better than expected. Fill us in on the key takeaway.
June definitely came in stronger than expected as the summer hit and families are out and about eating at restaurants. Still, when you dissect into those numbers, you can see that there's some negative around consumer electronics, appliances, and home furnishing. Most of those which are imported and therefore underline that there's still some tariff related stress. And when you look at the overall graph for retail sales for this year, you can see that there's a lot of volatility. It's been a very dramatic year in terms of retail sales, ups and downs, which are very much tied with how consumers are feeling about the economy. In fact, when you look at our LSEG data for consumer sentiment, you see that it's been a very turbulent year for consumers. When it comes to how they feel about the current economic situation and the investment climate, there we've seen some improvements. However, their perceptions about future economic conditions, those continue to deteriorate. Consumers are very much worried about what are going to be the prices that they're going to be paying, and so are retailers.
One thing that we've talked about, and I think we've talked about it often though, is that there's a difference between how consumers feel and what they do. They might feel down, but they might still spend. So how would you rate the strength of the consumer right now?
The consumers they're only searching for value-oriented deals. And this is mainly because they are dealing with very high inflationary prices. As you saw, the inflation data this week shows that prices, they're still dealing with high electronics, electricity, medical care, and things of that nature. And therefore, when they go out shopping, they are actually looking for a discount or promotion deals in order to shop. Still, what's very heavy on their mind is like what's going to happen in the future. Right now, because they're spending, like you said, there's a dichotomy, and that's mainly because they are currently employed. The employment market continues to be very strong. So as long as the consumer is gainfully employed and the unemployment number doesn't continue to rise, then they're going to continue to spend freely. But if that number deteriorates, that's when we're going to see them put their hands in their pockets and hold back on spending.
And one thing I think that's important to note is that the retail sales data isn't adjusted for inflation.
Right. That's
so
correct.
It's not just that consumers are buying more, they might just be spending more too.
Right, so the data that we've seen could also be inflated because of those inflationary prices, more because, and not so much so because of the volume of what consumers are actually spending. That is correct, yes.
You mentioned in the CPI report that we started to see some higher prices in certain areas, also in things like furniture and clothing. What is the consensus? How many retailers have actually pushed those higher prices from tariffs onto the consumer? How many are expected to?
So far, as of, we've been tracking it in a collaboration with Centric Market Intelligence, and actually up until the month of June, the prices in apparel have been down, which actually does explain why we saw a splurge in apparel sales in the month of June. Because as long as those prices continue to be down, we're going to continue to see the consumer spend in that area. However, going into July and August, that could be a different picture, mainly because that's when a lot of those other tariffs will be hitting. But yes, when it comes to expenditure right now, we're saying that the biggest winners, even for the rest of the year, are going to be the discounters, because consumers will be looking for those value-oriented prices. TJX, off-price retailers, are expected to do very well during the back-to-school season as kids go back to school. Yeah.
That makes sense. As I started to look at some of the biggest winners and losers so far in 2025 in terms of stock performers, I did see Dollar Tree, Dollar General, Five Below at the top of my retail watch list, but also included Canada Goose, Levi, Urban Outfitters, different price point. Right. And then at the bottom of the list were names like Lululemon, RH, Deckers Outdoor. So what is separating from the winners from the losers aside from just cost?
In addition to Canada Goose, you're seeing Ralph Lauren, Aritzia. Those are companies that are also expected to do well. And that's because they have a loyal customer following. And on top of that, they've been able to provide newness in terms of fashion to the consumer. So the consumer feels that they are getting something different than everybody else, and there also is a loyalty there with those brands. So we're seeing that those brands also tend to do well, especially when it comes to the upper middle class, high-end consumer, whereas in general, we're seeing that companies like Costco and Walmart continue to gain more market share of those high-end consumers looking for value.
What's one trend in the the retail industry that you think that the market might not be paying enough attention to?
We saw that the internet online sales continue to accelerate. And our predictions for LSEG is that that number will continue to grow into the second half of the year. In addition to that, I would also say that the miscellaneous sales today did very well in the month of June retail sales. And those are companies, retailers like secondhand store, mom and pops, vintage antique stores, or specialty stores. So what we're seeing is that maybe that's also a trend that was very strong during the pandemic. So consumers might be gravitating again towards trying to find unique items or trying to find secondhand items, again, just to try to save some money in this economic climate.
I think that's also big with the younger generation too. They like secondhand.
Yes, because it's sustainable and it's good for the ecosystem, and therefore we're saying that that might be still a portion, like you said, a sector that has not been over captured so far. So
many important insights from you, but bottom line, what's the takeaway about the consumer right now?
The consumer is watching and is very careful about what is going to happen with the economy. They are very worried about how much their pricing power is going to be, what the value is going to be in terms of like, are the prices going to continue to rise, inflation, what this means for my cost of living, and therefore they're being more discerning and more cautious about where they're spending. So as we see the trade wars continue to progress and see more of the numbers coming in August, then we're going to see that how things will moderate with the consumer. So far, the LSEG estimate predicts low earnings growth rates for the second half of the year, which is a big change from the previous 2 years where we saw double-digit growth in earnings. So we're seeing a deceleration, and for the very first time, we're seeing a negative growth for the second quarter, with first negative showing since the pandemic. So retailers are also being very cautious.
So retailers don't typically report until later in the season. It sounds like we have to prepare for some kind of downbeat news.
Yes, they've already been warning us not to expect too much from them. In fact, when we look at our guidance, we have received more negative guidance in terms of earnings expectations, outlook, and also revenue outlook, more so than we have in previous quarters. And therefore, analysts polled by LSEG correspondingly have been lowering their earnings estimates forecast, especially for the second quarter, which is expected to be down 1.7%, first negative showing since the pandemic. And then we're expected to see low single-digit growth for the second half of the year, underlining again that the consumer is very much concerned about what's going to happen with pricing, and they're being very value conscious.
All right, we'll leave it there. Jharonne Martis, thank you so much.
Thanks for having me.